What's up, everyone? Welcome to Ask Urvin. I am your friendly neighbor, Erik from Outlier Trading. Today, we are going to talk a little bit about the market, specifically the tech sector, and a little bit of Netflix earnings. For anybody that had the opportunity to take a peep at Netflix earnings, it was actually super interesting. And a lot of the activity that you're seeing right now in the tech sector is really, really interesting. So the general purpose for what we're doing here with this stream is we want to spend a little time just finding something interesting and double clicking into it. So that's the goal for today with the focus that I outlined right before. What I'm going to do is pull up my screen to begin. And I want to talk about some of the major activity across the indices. We'll look within some of the primary sectors within the S&P 500 and the other indices as well. But then I want to focus a little bit more on tech and some of the really interesting transition going on in tech. For those that don't know, my background is full retail trading for almost 20 years now. And I am primarily a derivatives trader. So you will hear a lot of that language as I move through the markets. If you have questions on literally anything, just ask. That's the whole point of us being here. That's the whole point of what we're doing. So all of that stuff aside, let's jump right in. First things first. I'm going to make myself a little larger. There we go. Okay. So let's get going. Over this past weekend, a ton of big news broke. We had a lot of the EU tension with the US, tariffs, Greenland, all of that kind of stuff that led to equity markets absolutely collapsing. And as you can see, undergoing right now today is almost like a pure reversal of what we saw almost entirely. Right now, S&P's up 1.5%, NASDAQ is up almost 2%. And IWM is up a little over 2%. Small caps running a little bit strong. Interesting to me here is volatility and how much volatility is collapsing. It had just started to break above the 19 handle, and we are seeing that roll down. Now, to get into kind of the main topic, a big thing that I do when I'm looking at markets is I look for relative strength and weakness. The way I do that is by looking across the different sectors. And I ask myself, what sectors are doing well? What sectors are not doing well? Over what kind of time frames? And that's how I arrive at tradable decisions, which we'll get a sense for in just a few moments. A couple key themes I see right now. Energy is still absolutely skyrocketing. Energy, if we look within, you'll find a lot of these specific sectors are being primarily driven by only a handful of names. It's a good place to look for momentum, which is a big part of what I do. The next thing here is when I look at services and then tech. Tech, if you look at the way that this 6-month chart has been rolling out in tech for the last 6 months or so, it's absolutely oscillating sideways. And it's struggling compared to the likes of industrials, energy, materials, staples, which has undergone a near parabolic rise. I want to focus here now on tech. So let's go into XLK and we'll start with this. Right now, on the general market movement, we're seeing a little bit of extended follow through. So like I was saying before, S&P's up like 1.5%. We're actually now seeing XLK up a little over 2%. So anything that's on the relative weak side that's starting to show strength, you can find interesting opportunities within here, which is exactly what I want to double click into. So first things first, let's take a peep at how the various sectors are doing across different timeframes. A simple way to use that is by using these moving average plots. It's just like a momentum factor, really, really basic, but it helps us know what kind of things are doing well in the near term, in the short term, that sort of thing. 5-day time frame, you'll notice that a lot of the market is actually 5-day moving average time frame, a lot of the market is actually struggling, like pretty bad. But energy, like we were talking about, and like I was telling you just a second ago, if we take a peep inside energy, you'll see that a lot of this near-term performance is absolutely strong. But it's how many names do you see here? It's not that many. And in terms of the larger performances, we have BKR up 9%, TPL 7.35, CTRA. So let's just take a quick look at something like BKR. This is again within energy. This is coming into earnings. This isn't even a post-earnings move. And then you can see how strong it's been ever since the breakout here. A lot of this has to do with the precious metals side of the world and the commodity side of things. That said, as this is cracking new highs, this, typically speaking, is a good candidate for something like momentum, which I typically would trade with options. But I want to talk to you instead about tech, because tech has been absolutely sucking wind. 5-day moving average, only 39% of the names within XOK are above the constituents. When we see that kind of behavior and we compare that against a longer term behavior, we can actually see that tech has been doing kind of poor for kind of a long time now. 200-day moving average, 150-day, 100-day, all of those, there's not a lot of names that are hovering above those moving averages. So it tells us that most of the sector is not doing well. If we look to validate that and we take a look at what names are doing really well over the last year, and we scroll through, you'll see that there's a decent number that are 100% returns, which is always going to be the case, especially in something like tech. And that's because tech really moves in surges. And right now, the current regime that we're in, super powerful. But we know that Netflix just reported earnings. So let's see where our good pal Netflix is as we scroll through this list that's sorted by a 52-week moving average. I'm scrolling. I'm trying to find Netflix. I'm sure it's here somewhere. And you'll notice it's literally completely buried. What I did was run through the Chat Urvin finance tool, which right now is kind of in an alpha stage. And this is a tool that Urvin is building that's really designed to help present like genuine market information, reduction of hallucinations, which is a primary component to this compared to other Chat GPT-esque tools, which are also fine for their use case. But as you can see, it's definitely in its very early stages. We're working on stuff like formatting to make it easier to read, increasing the prompt windows and stuff like that. But the cool thing about it is that the data that it does pull is very clean. So what we get, we kind of know that what we're seeing is what it is and what it should be. I started reading through how Netflix is performing compared to general competition. And Netflix is in a very curious part of its growth phase. It's at the point where it's still growing strong, but growth is starting to slow. And you can see when we're looking at PE ratios in like the mid 30s for something in like the tech world, it's not necessarily too crazy. And there are some in the tech sector that'll be all over the place, super normal, because tech has just a really wide spread of performance. But if we take a closer look at Netflix and its recent earnings, market did not like it. If I zoom us out first to a 1-year time frame to give you some context, I like to use like longer charts to get some long-term context. We can see that it actually started way over here. It is now negative over the last year. It's negative not by much, by about 1%. But over the trailing year, it just turned negative. This is relatively new for Netflix. Netflix for quite a while was going through this hyper aggressive expansion. If I zoom this out further, you can kind of see that here. This calls into question for anybody that's holding Netflix, what's going on? And then for those that don't hold Netflix, the follow-on question is, well, what might this mean for other tech names, especially things that are at least quasi-related to Netflix? What we can do is take a peek at its earnings. And within its earnings, you can actually pull a ton of really, really interesting information. So I'm going to give you a couple pieces to focus in on here. The first thing is 2025 revenue is up 16%-ish year over year, and operating profit is up like 30%. So those are both really good metrics. Q4 was like 12 billion, like 12.05 billion, with decent membership growth and ad sales. The major growth factor so far is ads. Ad revenue grew 2.5 times in 2025, and it's expected to double again this year. Why does this matter? It matters because think of what that indicates for other companies that lean heavily on ad growth and ad spend. That reflects across vast majority of the tech sector with some level of integration with ads. When I was looking through the rest of the tool here to get an understanding of things like option sentiment, which is actually a really cool piece to this, where it's porting in Prospero AI and Prospero AI option sentiment analysis, which if you guys aren't familiar with that, it's a really, really cool setup where the company Prospero, it has a tool that analyzes how near-term options are positioned and long-term around the money to give you some sort of factor analysis and deduce what it might mean. Now, this is a different tool. This is one called Unusual Whales. Super cool tool. I use it all the time. But it gives you a similar view, but it's definitely a lot more manual. You have to kind of like understand all the things that you're looking at. But one of the things that I can corroborate when I analyze the market sentiment as reported by Prospero and reported here through Urvin's chat tool is it's kind of like midline. And as I validate that, it kind of looks about midline. And what I mean by that is long and short premium is generally flat across the curve. There are absolutely some spots where the short premium exceeds long and some inverse, but that typically leads to a pretty balanced book. And with those balanced books, you can try and imply what the positioning means, because some of that will be synthetic long, some of it will be covering long stock, and you'll never actually fully know what it all is. But you can pick up small pieces, a little more difficult in really thickly traded names like Netflix, really, really liquid stuff. And I think in general, I completely align with what I see here, but the question then is, what's the opportunity? Do we think that this drop in Netflix is just another leg down? Are we in the middle of starting another leg down? Or do we think that the drop in Netflix is something a little more short-term reaction to this earnings cycle? One of the things that I use a lot in my trading, like I talked about before, is momentum factor. Notice this past earnings, not the most recent, but the one before. Notice how we had this big gap down, and then effectively we trended down over the entire following quarter. This is known as post-earnings announcement drift. There are certain criteria that lead to this kind of price behavior. However, that criteria can change and evolve over time depending on what the appetite is for people to start saying like, hey, Netflix is kind of beat down, but I actually think it's okay here. And I want to start looking at getting long again. That's the question. Now, if we use something like this to say, like, do we think that that's what's happening right now? Do we think that the market sees this move and starts to say, well, is this drop a little bit overdone? Should I start getting long? And we say, well, the sentiment is neutral. That's not super awesome for some sort of really strong return to strength. So this here is a really neat way to synthesize what I'm seeing in places like here, and then also literally just in the outright options market. If we take a look in here and we break down something like the volatility surface, which this might be a little in-depth, so I'm not going to spend too much time here. But what I want to focus on is stuff that's a little closer to the money. I don't want as much of the tails. And you can see, oh, that's way too much, sorry. You can see how much put skew there is. This kind of put skew, really, really normal in big blue chip names. A lot of people hold tons of shares and they will use options to hedge their positions. So there's not necessarily a whole lot to read into the put skew. It would actually be more informative if that didn't exist. But because it does exist, I don't really think much of it. If I look at the next primary expiration cycle and we look at the volatility across the surface. So right now in the front, that contains earnings, 37%, 36, 35, 34. Not really like a ton of skew now that the most recent earnings release is now factored into the price. But if we look at open interest to see where people are most interested, and we look at how the deltas are distributed, you can kind of see, and I think this tool might actually give you guys a good view as well. Give me one sec. Yeah, perfect. This will be a little difficult, I think, to digest, so I'll explain it to you. What I'm doing here is I'm saying, what's the current price of Netflix? About 84 and change. And I want to know how steep do the deltas move relative to about the money, because the market is effectively creating a probabilistic distribution of what it expects to happen. So if there's these big changes to either side, which sometimes exist, right now it kind of doesn't, then the market is kind of telling you something, that it's expecting some sort of moderate move in one direction or the other, but right now it's absent that. Why is that interesting? Because again, going back to what we just learned from looking at the Prospero tool and through the chat tool, it really does look very middle of the road. Like that's kind of what I see here. The other thing that I picked up when I was reading this, it says that the short pressure score is low, so that there's not like this really strong overhead from the short side, but a lot of this does look to be unwinding of people that have been in this thing for a long time. There's now actually going to be a lot of bag holders. These little volume nodes you see here can tell us a lot. There's a lot of people over a 3-year time frame that are holding Netflix from way down here, like the 40 handle. So they've made good money. But then there's also not an insignificant number of people that are up here at the 120 handle, people here at the 95 handle, people here at the 90 handle. Right now, Netflix is undergoing a pretty big change. In the near term, I'm way more bearish than bullish. The key areas that I'm interested in is, does it start to break through these really close volume nodes or does it not? We know that from its earnings release that revenue growth and overall growth looks okay, but it is slowing. The multiple is going to slow. And we know that subscriber growth is also slowing. So what do you guys think? Are we at a point where Netflix is starting another leg down? Or do we think that Netflix is starting to base out, which to me seems a little early to tell? You guys should absolutely hop on. You guys can see, I'll throw the URL. You can go to literally just chat.urvin.finance and you can grab this tool on the web base. There's also, if you go to Ask Irv in the app stores, you can find it there as well and tinker with it. Like we said, it's super, super early stages, but kind of a fun tool to tinker with and see what you can pull away. We definitely are looking forward to see how this performs and how the market continues to unwind. And as always, we look forward to hanging out with you guys, and we will see you on the next episode. Awesome hanging out. We'll see you guys on the next one. Catch you guys later.